What's happening, everybody? Happy Thursday. Welcome back to the final hour. It is 3 p.m. on the 27th. And today I'm going to give a little preview to what I'll be talking about this weekend. I have a 12 p.m. webinar on money manager hacks, ways to protect your portfolio, watch for the downside. We've had a lot of years where I have basically had an approach of being cautiously optimistic and cautiously bullish. That has served me pretty well. I mean, the cautious side is I do play some trades to the downside. I do have protection. I was going back in the last 6 to 12 months, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trades. I'd say 10 of them have paid. 4 of them are still running out to the rest of this year. I've only had a couple that I haven't really had them pay out. So I pick and choose my battles. Some of it's based on it's mostly based on technicals, but this is what I'll be talking about a lot on Saturday, and I'm running courses on this through the entire month of April every Wednesday. So I will have some links to that in my Telegram channel. If you're interested, you can join it. The webinar is 12 p.m. Eastern Time on Saturday, and classes will start running, I believe, the first week of April on the 2nd and the 9th, 16th, 23rd, and maybe even the 30th. I'll just go every Wednesday, I think, for the month of April. So if you want to check it out, let me know. But let's get started. So final hour. Markets today, relatively calm. We started out down, came back up, came back down. It's interesting. We're right smack in the middle of where we pretty much started the day. So we started right around a gap lower, and we are trading right at that same level today, right around 304 in the final hour. So are we going to revisit the highs, revisit the lows? I almost wonder if the rest of the week / quarter is going to be a big nothing burger as we kind of wait and see what April 2nd looks like with Liberation Day / tariff talk. Is there a little bit more certainty this week? It sounds like every car made in the USA will not have tariffs. I don't know what the details of that requires, parts made in the USA or just car companies in the USA. Is this a pro-America car brand? Is this, Honda makes more has more cars in the USA than, Ford or GM, because a lot of those plants are in Mexico now. Tesla has a lot of pieces in Texas, and I think there's big plants in Ohio. There's still some, GM is a big one in Michigan. Ford is a big one in Michigan. So anyway, I'm not sure the extent of it, but it was announced this week. I don't think that was really a huge contributor to the markets slide yesterday. I'm looking at just where we are from the technical picture, and I want to take a zoom. So first, I want to zoom out for a second. Okay, let's zoom all the way out to our range we had back in 2000 and 2002, to the highs in 05, 06, to the crash in 07, 08. Let's take this longer term trend line out here. Okay, and let's go from the COVID low, because I thought we had a pretty good broadening pattern going on from these lows and these highs that the market clearly was able to break. You can see that the post-COVID crash, we break to the upside, we consolidate, go higher, pull back again, retest the same area, and then once that is done, up, down, up, down, up, down, markets continue to wave. So I thought about this. I just started from the COVID low and started looking at just swings in the market, right? I think it's pretty fair to say that this swing right here would be a wave 1, because it was so strong and impulsive. This is a pretty fair correction wave. Wave 3, I think we completed, right? I think this swing 1, pullback wave 2, push wave 3. If anybody's familiar with just pretty simple Elliott wave stuff, a 4 wave is really a corrective wave, but it's also a pause, like grind. It's not really an aggressive pullback wave. So that could explain like where this kind of current market feels like it is going, which is a lot of nowhere. And perhaps it grinds out in this area before we have that 5 wave move, which could be. I would not be surprised if we get up towards like maybe 7,000. Based on the swing that I have right here, I'm looking at about 7,400. If we have a pullback zone, let me check on this first wave cycle here. Let's go from low to high. So that puts us up around a 50% pullback zone and possibly a finish around 6,450. Okay, so 6,450 completes this move. Okay, so we have wave 1, 2, still pushing to wave 3. Does it get to 64.50 to finish this? Or are we going to have a pullback first and then finish this wave 5? Maybe. I don't know. But I also want to be prepared for what if this isn't picture perfect, and what is this? What if this is a wave 4 that's going to be more of a corrective wave? So corrective wave, are we going high, low, lower high, lower low, lower high, lower low, something like that? We have previous resistance. We have future support. It's certainly not going to be fun if we have a correction that comes back into these 2021, 2022 previous highs. That's going to be about a 20% correction in the S&P if we get there. So either we are going to continue to, chop around in this environment with really no direction, and we see what that eventually looks like. Maybe this chop is just a structure move that eventually gets a break to the upside, or this is a choppy move that starts to roll over and we break this structure and then head down for correction before we have that final move to the upside. But I do have some concerns going into this year. I don't think that the here I'll actually post a message what I typed in earlier today. I'll just read this verbatim. So give me 1 second. All right, here's what I posted. Trump administration need more pain in the markets to force the Fed's hands at an emergency backstop. Recent history from July 1998. This is to me like the historical rhyme of the market. July 1998 to October 1998. Let's get back to there for a second. I'll show you what that looks like. So here is 1998. I mean, most traders wouldn't think about this as a bad situation, but this was kind of the roaring 90s, if you will. Like the markets were supposedly great during the 90s. I was a kid, but I mean, I did start trading right after high school. That was in 2000, and I didn't know what I was doing, but I was willing to dollar cost average and try to pick some stocks. And I mean, I was brand new to the whole idea of trading. So the dot-com bubble was new to me, and I had no idea other than things were on sale. And if you held indexes through a couple of years, you got paid to do that. And then we saw, it took a while to fight back. I mean, this is a high in 2000, and we didn't eclipse those highs until 2007 on the S&P 500. So, I mean, traders have been spoiled for the last 5, 6, 10 years, 15 years even, that we have not had a pullback for more than about a couple of years. 2022, we broke fresh highs in 2024. That was really the deepest and longest drawdown we've had since 2000. That was a nasty drawdown that took a lot of years to get back. Granted, there were gains along the way from like 03, 04, 05, 06, 07, but we didn't eclipse those highs until 7 years later. So that's a wild ride. And take that right into, congratulations, you got back right to your highs, and then we have a fresh low with the great financial crisis at 50+%. So anyway, let's go back to 1998 because this is what I was looking at. This market was up January 98 into summer, and we had a little peak in July, August, and this market dropped about 21 to 22%. Now that did proceed with a bottom. That proceeded with a bit of a backstop, and this market did end up going. By the end of the year, we were actually at all-time highs again. So I don't know if that's what we're about to see, but if we are, I'm going to get ready for it. It's not a matter of points, but it's a matter of percentages. Okay, this move is 21 to 22% from that high to low. So if we take that to now, it's going to feel a lot worse. It's going to feel like freaking doomsday. It's going to feel like the market, can't get a hold of itself. Traders are going to panic. Investors are going to flee. Outflows are going to be incredible. But there's going to be an opportunity that sets you up for years and years of hopefully success. But if we had a 20% pullback, that is right here. This is that 20 to 22% pullback. Okay. Now, technically speaking, to me, that comes into a pretty solid level. Previous resistance becomes support. Will the market be exactly spot on? Probably not. The market may overshoot it a little bit, and the market may undershoot it a little bit. But if we're watching this area, that to me is where I want to be a big buyer of the market. Not overextended, still taking defined risk trades or still taking stabs at the market with an insane discount. But also, this is what I'm hedged for. So if the market is going to be dropping here, I have plays that from around 5,700 to 5,500 to even 5,000. Do we go from this area down to 4,800? That's a lot of potential profit on hedges. That's a lot of potential profit on, taking some protected plays that don't cost a lot of money. So I've got a trade on that is, just share some of these examples. $985 a risk for about $3,500 of profit. $1,200 risk for $6,300 in profit. $880 risk for $5,300 in profit. $490 risk for $1,300 in profit. $975 in risk for $44,000 in profit. That one is obviously a monster asymmetry trade. But if I can turn 975 into $5,000, that's a heck of a trade. $5,000, $10,000, potentially up to 44 grand. That's a monster trade. But I'll see what the market has to do. But those are all, to me, cost effective ways to trade the downside. And I want to put those plays in. Those, to me, are fractions of 1% risk, anywhere between 0.25 and 0.5% of my accounts. And I'm willing to sacrifice that potential, 3% if I did a 0.25%. And let's just say I have like a quarterly hedge. I'll keep this pretty simple, right? If I have a quarterly hedge, and I'll talk about this more in the webinar on Saturday, and I'll talk a lot more about this in the classes I run on Wednesdays through the month of April. But if I did a 0.25% risk on the quarters, okay, I'm risking 1% of my total account to potentially make 5 to 10% on my account. So for me, it's worth the sacrifice of 1% to have a 5 or 10% pullback, because that just enables me to get ahead faster. If I'm right, now granted, I can sacrifice 1%, never have a single hedge pay me, but it's a 1% risk for something that could also help me protect the 5% drawdown, protect the 10% drawdown or more, and survive, right? And so even if this market did drop 20%, maybe 5 or 10% of that I can absorb. And so rather than me being down 20 plus percent, having, individual stock risk and other things that are looking really ugly, and stocks are down 30, 40, 50, 60, 70, 80%. If I have exposure to those stocks, it's going to be a lot of painful trades. But if the overall portfolio can be managed to, let's say I can reduce about half the drawdown. Well, the index being down 20%, I'm only down like 8 to 10%. I can stomach that drawdown, have cash to position, and then build a stronger recovery where I don't have to wait for the market to get back to all-time highs for me to achieve all-time highs. I need the market to come back about, 5 or 10%, and I'm back to all-time highs. If the market gets back here, I am well ahead of the game, right? And so as a buy and hold investor, you dollar cost average, you're down 20%. You got to keep dollar cost average in. You build a bigger position. Eventually, it gets back to the highs. Hooray! But how long did it take? Right? That could be months and months, if not years, of opportunity costs. And that's the downside with not staying consistent with the market, and not reinvesting dividends, and having the fear drive you further away from the market as opposed to staying with the investing decisions. They're hard, right? Investing decisions to invest, as Buffett says, when others are fearful, it's not easy. All right. But the ability to set yourself up for some pretty monster success, with probably within a couple of years, I would imagine. I think the cycles now are way faster. I don't think it would take 5 to 7 years to get back to all-time highs again, especially if there is major economic reform. So a couple other things that I mentioned here. So that 1998 to October 1998, that was a 20 to 22% correction. The bottom proceeded to rally hard until we got to all-time highs by the end of the year. That was like a 25 to 27% rally by the end of the year. And we ran that all the way into the crash in 2000. So from the survival in 1998, you had all of the rest of the year in 98 and 99 and into 2000 before the market crashed, right? So you had like a 67% rally from those lows off of that 20 plus percent pullback. Now, if we start to see the market reaching a pain level, I think the same type of thing happens. We have Trump and the Republican majority and Doge that are not just floating ideas out there. Like, there are actionable plans to fix the government, to, get rid of corruption, fraud, and blah, 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 all the things, right? How effective will it be? I don't know. I mean, one thing that's eerie about the U.S. government is that 100%, 108% of our GDP is like Medicare, Medicaid, and now it's interest expense and military spending. 108%. So even if all we paid for with the U.S. government is military spending with the defense budget, interest expense on our debt, and healthcare, Medicare, Medicaid, it's 108% of what the government brings in. So we're automatically operating at a deficit. Everything else we fund is just furthering the deficit. And so the deficits have been obviously growing and getting worse, putting us on this, what everyone's tracking is like this unsustainable fiscal cliff, which I get it. But our percent of GDP, I mean, we're 100 and we're pushing that like 120%, which has always been this historical cliff. But yet you look at somebody like Japan that's 100 or like almost 200% debt to GDP. So I don't know if there's more slack or flexibility in that, but I don't think that the path we have going forward is sustainable. So, I mean, right now these ideas are very real. This is probably one of the more disruptive administrations that we have seen in a long time. The fiscal policy was extremely strong through the Biden administration, and the deficits widened, and we essentially, funded the economy. We had this recovery, we had this, surging stock market because it was just incredible amounts of fiscal spending while the Fed was tightening. So the combination of monetary policy and fiscal policy, that's a powerful force. But when you take one away, the government still stepped in and funded the government in a big way and had, I would say, excessive spending. To now, that's what's being questioned: is we cut the spending, how bad does it get? We cut government spending. Does the government drip into private contracts? Does it drip into the peripheral jobs? And so we have the risk of job losses. We have the risk of a slowing economy. We have the risk of a stalling economy. We have the risk of recession. So it's not like noise, in my opinion. It doesn't mean it's a guarantee we're going to go down, right? I mean, we've had recessions where the market goes up, and that's probably even more confusing. That just makes people even more mad because they're seeing that the stock market is higher, but the economy feels worse. So that's maybe the case. But I would not be surprised if Wall Street has like a wake up call, and because of the severity of it, that could be where the government all of a sudden gets the sweeping reform that it wants. That's where the Fed would step in and be willing to take more emergency measures. And then all of a sudden you have that type of correction that is met with a supply side economics boom that is going to be the kitchen sink to kind of save the economy. So we can have this like first year crash in the Trump administration and potentially build back into all-time highs and have a 2 to 3 year run as we get into midterms. We're back up and survived. But it can all be done under the plan of we have to fix the government, and if it doesn't work, well, Trump's not going to take any accountability for that. It'll blame it on something. Elon Musk could be a fall guy. Doge could fail. But there's things to be legitimately concerned about. I listened to an interesting podcast yesterday with Tasty Live and Tom Sosnoff. He was talking about this idea that Trump's family with their whatever federation, World Federation coin, blah blah blah, whatever they're doing in the crypto space, they're talking about launching a stable coin. That makes me really nervous. Like, you've got a president that is enriching himself with things, I mean, financial instruments. Um, I don't know enough about it, but it sounds pretty risky when you don't have any real regulators or a majority as far as checks and balances to maybe check that. Because as we know, stable coins are not guaranteed. That was the big crash in 2022. That's what is Sam Bankman-Friedman, right? That's what he went to prison for. Tons of scams, I mean, who knows? So I don't know. This is what I'm saying. Like, plan for the best, prepare for the worst. The worst could be really bad. We could have a 20+% correction. It could overshoot this and scare the crap out of everybody. And then we have an aggressive bottom. And if you're wise enough to see this technical setup and see that this pain could be ending at some point, then you have the opportunity to invest and hopefully make a ton of profit. But it's not going to be easy how it gets there. It's going to be a wild ride if it gets there. At the same time, I go back to this big picture and say, okay, if we are in a 5-wave move, and this is wave 4 that's starting, 1, 2, 3, wave 4 is usually a choppy, ugly correction before the 5th wave starts again. And the 5th wave is not as strong as wave 3, but the 5th wave is still focused on higher lows and higher highs. Okay. So this is what I'm looking at. But if we go wave 4 that becomes corrective, I still think this is where we go. And then wave 5 is still stretched up here. So I wouldn't be surprised if whatever this market needs to do, either we get to a 7,000 or 7,500 finish line, but how do we get there? It could be extremely difficult and an ugly road, right? That's my finish line. Okay, so if I put checkered flag up here around 73 to 7,400, I don't know how long it's going to take, but if it gets there, it's better to be, eyes on the prize, keep the destination in mind, trade your way through this. And if this market offers up what I think would be a multi-year opportunity at good discounts, I'm certainly going to try to do my best to take advantage of it. What else do we have? U.S. is stuck with slowing growth, sticky inflation. We have a majority voter. I would say that people that supported Trump, this half this country or better, are still feeling like they're left behind. They're wanting things to get fixed. Main Street is struggling. Consumer stretched thin, overextended. Market pullback is Wall Street and Main Street. It can occur under the guise of fixing the government for the economy's long-term success. And I think the other thing that everyone's watching very closely with the U.S. 10-year rate. And the only way the U.S. 10-year yield drops, in my opinion, is going to be another leg lower in the stock market. This is the only way that the market saw the 10-year yield drop, was with a correction. Here we are on the daily time frame. Still, 10-year is sticky right around this like 4.1, 4.3%. I don't know if tariffs are going to raise this. Everyone's talking about, oh, the Fed needs to cut. Donald Trump's talking about the Fed needing to cut. Look, the Fed cut right here, and the yields did the exact opposite. So I don't trust that another rate cut is going to fix the problem. I think a rate cut still makes this thing react the wrong way. And this is very problematic, in my opinion, to see the 10-year go higher. This makes crap more expensive. So if we have another flush in the markets, flush down to the markets, perhaps brings us lower, because that was also how this came lower, right? This is a top here, January 14th. Go back to the S&P. S&P, January 14th. Let's just see how this behaved. So this started to fall around 15%. So we had a 10 to 11% correction in the S&P, and we had a 14.5% correction in the 10-year yield. Okay, so what happens if we have another 10 to 15% correction in the markets? Well, perhaps this can fall another 15 to 20%, maybe. But without that happening, I don't think this 10-year is going to go anywhere other than sideways or up. And again, you want to buy a car, it's going to be expensive. You want to buy a house, it's going to be expensive. You want to refi your corporate debt or refi for a new project or it's going to be expensive. And this is where I think the economy stalls. It's going to be a tough business decision to basically wait and see. If it was cheaper access to funds and more liquidity, people would be borrowing, people would be refinancing, and the market just hums along as it does. But I think this 10-year is really sticky. Okay. All right. Does that make sense? Any questions on that? All right. What else? Christian, simple put buys, bear put spreads. Yeah, they're pretty cheap. I do a lot of spreads. Bear put spreads, pretty simple. Out of the money spreads, at the money spreads, some profit traps. They're a bit creative. I'd say between like 3 to 5 strategies, pretty creative. But for the most part, like a debit spread is usually what I do. Okay. Let's see here. The national debt's still going up. They raised the debt limit. I know. It's not stopping. There's also this Trump administration through the mask of Doge could still be increasing the debt ceiling by like $4 trillion over this administration. So don't think that it's like, well, we're going to balance the budget. We're going to reduce the deficit. Are we? Like I'm saying, like this is an unsustainable path. And I think this is the hard stuff that needs to get addressed. But you're playing with like political roulette, just because if you want to get elected, you can't talk about austerity. I'm honestly, look at what Trump got elected on. For whatever reason, people like him. And you have the promises of tax cuts and deregulation and good for the economy and everything's America first. That's what he got elected on, right? But what are we focused on right now? Mass deportation and job cuts. That's not the platform that makes people excited, So I think, if people are really embracing the fact that we might have a lot of pain ahead, then that's an interesting perspective. But certainly you don't want to see people losing jobs. You don't want to see the markets crazy disrupted. You don't want to see people lose faith in the system, and I just think it's an interesting like flipperoo on like how aggressive we've come out in 2025 with things that aren't really painting a rosy picture of the economy, right? So what's gold telling you? Inflation, anything? Gold is telling me technically that it needs to come down, right? Gold is still going up. Gold is probably one of the biggest signs of what this world is doing, which is trying to get things away from the dollar. But this could also be like a big story for the year 2025. Look, I keep going back to this. I am happy that I'm out of, I don't know if this is still going to show up on my trade. I closed this trade out yesterday for a win. I had $120 credit on GC futures and I closed it out for $140. So I took a little bonus profit on this one. I ended up making like $1,000 on it for all my accounts. But I'm glad that I got out near the lows yesterday because now it's up and I'd still be sitting on the trade. Now, there's still a profit trap. I'm curious what that April 24th contracts looks like for GC. So GC for an April 24 contract. Interesting. I'd actually be in a profit trap right now. So let me check something really quickly. I'm going to go to this GC trade. Okay, so I did the 3080 by 3085 and then the 3250 by 3290. This is the trade that I was in. Okay, so right now this trade is offering $1 credit, and I took the trade originally for $1.20. So this could potentially be up even further. And so I got $1.40 out of it, and this looks like I could have been grabbing closer to like $2.10 or $2.20. It's fine. I'm no longer in the trade, but this is now in the profit trap because once we're greater than 3090 on this contract, greater than 3085 is a potential $5 profit trap as we go to the expiration April 24th. Okay. And on top of that, as long as we stay below 3250, then I collect the credit on this wider bear call spread. So, I mean, like I said, I'm out of the trade right now, but gold to me is a bigger story because I don't see how gold can continue this run from a technical basis. Obviously, gold can run, but be on the lookout for some type of, if gold like blows this top off and capitulates higher, I wouldn't be surprised if once this top is in, that gold comes all the way back down to this 200 moving average. So at this point, I will say I am not buying gold. I'm not. I'm still running with GLD. I'm still running with CEF and PHYS. I still have silver futures and gold futures positions. I own shares of SLV and GLD, and those are fine. I'm long, but I'm not buying more right now. I think that there is a correction coming. So here's what I talked about, like CEF. That's up about $3,300 right now. GLD, that's up $15,000, almost $16,000 right now. I go to PHYS, that is also up around $3,000, and I go to SLV, and that is up around $15,000. So I'm long those metals, and I'm going to continue to run with whatever this market's doing. If we're going up and we're going to, just rip higher and capitulate higher, then great. I don't want to stop it. But from a technical standpoint, this is overextended in my opinion. I have some levels here like we're overbought. We're overbought. We also have divergence, and it's just, I mean, it's not like a matter of if, right? Like this will happen, but it's when. So I don't know when, and so that's why I wasn't trying to get in the way of it. Like the fact that we had this little tiny pullback was enough to make some money on that little, setup that I did. It was essentially like a call condor. It's a fancy strategy for I'll let the price go higher and still make money. As long as it doesn't breach 3250, I still make money. And that trade only took me about 2 weeks to get out of the trade. I did like 45 days expiration. It took me about 2 weeks to get in, get out, hit my profit, actually exceed what I had for the original profit, which I'm good with. So I mean, gold is telling me that this world is still hoarding gold, buying gold, wanting gold to go higher. This is probably one of the better spots to be investing right now. Gold and copper are probably two of the best performing assets in the world right now. Bitcoin is at 87, still kind of this accumulation zone. I think the key level in Bitcoin is as long as we don't do too much damage below 75K or 70K, this could overshoot a little bit, but as long as we don't do too much damage below this trend line here and this, past resistance, then I think Bitcoin, might head down again, but it's really choppy. If we have risk appetite and Bitcoin can break above, well, then sure, we can see Bitcoin rally back to highs. Maybe this is a good trade for 2025. If we have risk on, Bitcoin's still a good trade. If we have risk off, this is my concern. This would be Nasdaq's down, S&P probably goes with it, Bitcoin goes down, MicroStrategy goes down, Coinbase goes down, like all these things, right? So anyway, speaking of Coinbase, let me see what I have running right now. I think I've got some positions on Coinbase out to April because I closed out this week's expirations. April 17, April 17. Okay, these trades are in. Hey, interesting. These are actually. Oh, they're fine. They're 155s. I thought they were the 195s. My trade on the one, I did a 205 by 200 by 195. That trade closed out for a winner. That was an expiration for this Friday. I did the one. It was the 205. So 205 by 200 by 195. Even that right now is offering up $1 credit. So I mean, again, I wonder. I think I closed it out for I don't know what the income was, maybe $2. Go to Coinbase here. So $1.07, I closed it out for like $1.40. So I took a little bit of bonus profit there, but right now it looks like I'm maybe showing like $2 of profit. So anyway, it's fine. 195 was the line in the sand. We did breach it, and now my line in the sand is down here towards the 155. So Coinbase would have to drop another from current price. We'd have to drop another 18%. Obviously, it can, but if it's like this slow grind, like this trade might be fine for the next couple weeks, and that's another income trade for probably another $1,000. MicroStrategy, as long as I'm above 310, hopefully some more money there. I did a roll on this one out to June. Let me actually update this. So MSTR, I did a roll this week for like $8.55. So I'm just continuing to have more income. I now have a break even of 254.97. So this was a roll to 620 expiration, and my new break even is 54.97. And I still have a 310 covered call, and I've got the 200 long put. So I've got a collar trade on this, but my break even is 254. The nice thing is if we have this level of support around 240, then this is still, good to say like, hey, I'll hold the lows. If we get back up to 300, 310, then I'll still add covered calls and, ultimately try to build this thing up and do a nice winner. If it gets called away in June, then I'm looking at like a $55 per share winner, which is pretty decent. On 300 shares, I'd say that's pretty good. So 310 minus 254.97, that's $16,500 if it stays above 310. But my break even is way lower. I continue to work the cost basis down. Will the replay today's webinar? Yep, it's always recorded. It's always on my YouTube channel. So if you come to my YouTube channel, all the sessions that I'm doing here are live, right? So if I update this, it'll show that we're live right now. There it is. So we're live here. If you come to my YouTube channel, youtube.com/Chris Pulver, go to the live column and it'll pop up and it'll be, today's session. So when this is done, that it always posts and it's like instantly archived. Yep. Okay. All right. That is MSTR. Let me check something really quickly here. I wanted to go to see where my DT is for this week. So I have a trade on the SPY tomorrow. This one is what is this guy? March 28th, orange. Weird. This one. When the heck did I take this trade? This wasn't a waterfall trade. What did I do on this trade? Oh, I put this on. It's a hedge. Never mind. I put this on for tomorrow. So this is if price is below 567, it's a 1-for-1. So anyway, that's the trade I put on. All right, never mind. I put that trade on today. That's why I was like, what is that trade? I forgot all about it. DTE. Let's go all accounts. So I've got expirations on the SPY. Double up for that's as long as we stay above 566, I'll make $420 on that tomorrow. That's it for the SPY. Tesla. Expiration wise, this is a 111 that's going to be expiring as long as we stay above 250. Tesla's trading at 277. Probability is it looks pretty darn good. I'm going to keep this trade running because if tomorrow, right now I'm actually up a slight profit that's bigger than my credit. So I pulled in $1.28. It's up for $1.40. So I could just close it out for a profit trap. Let me look at the option chain for tomorrow on Tesla. If we go to expiration tomorrow on Tesla, the probability of getting to 255 or 250 is really, really low. Yeah. So if it gets there, I actually would have potentially a $600 winner as opposed to $140. So I look at this trade as either I keep the let me change the color here. I either keep the $128, $128, $128, and I keep all three of those for winners. So I make, what is that? $390. So I make $390 right there. If price drops tomorrow and it stays around this like 260 to 255 area, that potentially is a $5 profit trap. So it could be 600 and 600 and 600 for an $1,800 winner. I don't know. I mean, I don't have to do anything as long as we stay above 250. There's no risk to these trades. I'm also willing to, take some shares. I don't really want to, but I probably shouldn't have to. We'd have to have like a pretty nasty Friday for Tesla to drop and drop that much. Like the expected move tomorrow, 250 would be about a 3 delta right now. So the probability of that happening on a Friday, pretty slim. There's a 97% chance that stays out of the money, and this trade will probably just close out for the full $1.30 profit. But if it does fall, then this all of a sudden makes this profit trap a little bit more attainable, and that could help me juice that winner a little bit. Okay, so that's Tesla as far as expiration for tomorrow. PDD, this is going to be a losing trade, unfortunately. So that one's annoying. Let's see here. Let me go to this one. There we go. So I've got one trade that's down about $1.50 and the other one's down about $6.90. Let me see if I can close this one out. It's going to be a small. Odds of this going anywhere tomorrow. Yeah, I'm just going to take this one off for $2.25 credit. Take the small loss. Okay, and then the other one is pretty much worthless. So I'm just going to let this one expire tomorrow. There's nothing I can do on it. It's fine. So that one's done for tomorrow. SPX. I'm now starting to see some profits on this trade that expires on Monday. So for above 55.10, I'm looking at $173 per contract. Same thing here, same thing here, same thing here. So it's a pretty key level for me by SPX Monday is to stay above 55.10, which is actually at the lows. So SPX 55.10 is like the low that we saw, and we'd have to get there in 2 days. So does this market have what it takes tomorrow to dump all the way down to 55.10, which would be about a 3% sell-off in 2 days of trading? Anything is possible, but unlikely. I look at the expiration for Monday. If I go into my option chain, go to Monday for the 31st, 55.10 is trading at a 17 delta. So about an 82% chance that it finishes in the or out of the money, which is exactly what I want. I'm sorry, 55.10. It was way down here, so it's even further out. Okay, so the probability on this trade is about a 95% chance we stay out of the money. That would be great. So on that trade, I'm looking to this is 175, 175, 180, 173. I'm looking to get those closed out. So this would be how many trades? 1, 2, 3, 4, 5. That would be 5 around $175. So 175 times 5, it's $875 by Monday, with a about a 95% chance of profit on that one. NDX, these are probably starting to look better as well. These expire on Monday. My threat level would be 19.3. 19.3. Let me look at the option chain for Monday on NDX. Monday 19.3. Again, way out of the money. About an 88 to 89% chance it stays out of the money for Monday. That'd be pretty good. Hopefully the quarter doesn't end on a sour note. Then it would potentially have some risk. Otherwise, it's another income trade. Worth, let me label this one here. This is a 1111. So $1, $1, $1. There's like all worth about $1.10, and I have a lot of them. So 1, 2, 3, 4, 5, 6, 7, 8. So another $880 on NDX by Monday. So on NDX and SPX, maybe close to like $1,600, $1,700 of income with levels that are pretty far out of the money. They should be fine. XLE, this trade expires on Monday as well. This is pretty much at 100% profit. I shouldn't have to do anything to protect it. We're trading $10 above the strike prices. I did a little put combo there. XSP, some more waterfall trades. This one, these are near-term expirations, but they're not pressing by like Friday or Monday. I did tell traders my waterfall income service that I'm going to be watching these closely coming into the end of the week and the end of the quarter, because I want to see if the XSP can stay above this 565, 570 handle. I don't really want to have to wait all the way to April 4th if we don't have to, but I will be watching these closely. There's still some heat in these trades right now, which I'm not like super stoked about, but it is what it is. So I'm still looking at the same trades. This one is if we stay above 559 by the end of April 4th, which is next Friday, This one is out to May. That was a new trade from this week. This one is out to the following Friday. 560 is the key level. Same thing here. 560 is the key level. So as long as the market doesn't take this massive dump the first week of April, these trades should be looking good for more winners on waterfall income, right? And let me go back to days to expiration. Palantir, these are all going to be in profit. I'm up 4,200 bucks. Those are coming to a close in about 20 days. Way out of the money levels now. These were like active ratio spreads in 2024. Bitcoin, I don't think I have any pressing expirations here. The 45s and 46s, that's a little bonus trade that I put out for my Project Options Edge. Those are looking pretty good. SLV looking great. I'm up 17,000 bucks, and I'm not stopping. I don't want this thing to do anything but go up. I've got covered calls into April. We're probably not getting above 35 bucks. I put on some also diagonal spreads. So I mean, it's one of my better running positions. That's good. UNG, this is for natural gas. I'm still up about $3,500. I do have an April sell call. If it doesn't get called away, I'm up about 60% of those calls right now. I'm just going to let them continue to work. If it's above $23, I make money. If it's not, then I'll just reset and add another trade. This is a diagonal spread that's out to January 2027. Baidu is creeping up towards 100 bucks. I do have some covers at $100 out to April. If Baidu crosses 100, I'm probably going to roll it. But if it gets called away, it's also a nice win for about 15 bucks a share. So not too bad. URA, I looked at this one today. I have some shares that are down, but I also have some diagonals that are profitable, some covered calls. I'm going to just continue to kind of monitor this one. Not taking a big trade on it, but it's, got a collar trade. I'll just have to look to protect the option side. Apple, nothing crazy here. Some ratio spreads on Apple for some income. My Apple trades are up $28,000. And yeah, I'm just going to let them do their thing. A lot of income, a lot of profits. It gets called and covered away. I'll just keep rolling it. I don't think I want to get rid of Apple. I was going to keep it and roll it. Gerald, you're talking about the webinar today with Graham. Good question. Let me see if I can find a link to that. Let me find this. Okay, I'm asking for it. If I can get the link, I'll share it. Gerald, are you in my Discord? If you're in my Discord, I can post that link. I can send that in like the free group chat, or you can just send me a message on Discord. Just go through the public channels and find my profile and send me a message. Okay. Well, I'll try to find that. Trading Wars YouTube chat. Oh, okay. Let me see. So youtube.com/financial wars, which I'm also live on right now. This trade opening playbook. Oh, this one right here. Yeah, this is it. So here it is. You got it. This actually is part of the opening playbook with Graham. So I'll share that link right now. You can check out the whole session. Yep, I got it. So this is the Graham plus Chris session for March 27th. There you go. There's a YouTube link. So check it out. Cool. Well, that was easy. All right, what else? Think I was just looking at the DTEs. Yeah, now I'm into like the 21. So yeah, I mean the pressing ones right now are these trades. SPX, NDX looking good. Watching SPY carefully. XSP watching for the April 4th expirations, trying to close out some more winners. If we stay above 560 right now, that expiration for the 560 on XSP. So when I look at the deltas right now, this is April 4th. 560 is at the bottom end of the expected move. It's trading right now for around 25 delta. So I mean, obviously it can get there. But based on current volatility, if we don't have a big scare, like the odds of this closing out of the money are still pretty high. It's about a 75% chance of still winning the trade. So I will be watching that carefully. Plus, we have a profit trap. This actually, I don't know, it might be interesting how this all plays out, but we have a profit trap on that trade. So we could have a $100 winner here on top of the credit. So we might be able to pull in like 150 bucks or maybe more. Let me see what that one's trading for. April 4th. That one is worth 48 cents. This one is worth potentially $1.64. That one's worth potentially $1.68. Actually, this one might be worth $2.64, so about $264. This one, same thing, about $268. So, yeah, it's not nothing. I'll keep an eye on it. Okay, very good. So we are at an interesting spot for the remainder of this week. We have a core PC coming out tomorrow morning at 8:30 in the morning. The market is sitting right at this 200 moving average on the S&P. Let's check at the SPY. Sitting right at it again on the SPY. I think this is kind of a key level to hold. Obviously, the market found the gap from that Friday, Monday. I think that it'd be a nice little way for the quarter to end if the bulls can just sit here and defend and not let the market implode. But if the bulls can defend this tomorrow, where we have this little evening star, but it comes back and fills the gap and then bounces and actually closes slightly higher, that would be a good sign going into the first week of April. That would also be in line with maybe the buy the rumor, sell the news, where even as the Liberation Day tariff talk comes out on April 2nd, the market takes that as, okay, it was priced in immediately. The reality is that the negotiations are a little bit softer. There's more wiggle room in these tariff talks. Maybe, right? I don't know. It could also be a reason for the market to drop hard. So I'm playing like a lot of, I don't know, I'm just playing protection. I'm playing aggressive defense just in case. NASDAQ, we're sitting back below the 200 moving average. This one looks a little bit worse off as far as this move yesterday has put us back down below the 200 moving average. And so this was and it didn't even get to the 38% zone. So again, perhaps like it fills this gap. What's it doing today? Did we fade most of the day? Qs, let me go to this chart. Let's go Qs for the day. So SPX is clinging like we basically are right where we started the day. So we're just break even on the day. NASDAQ is down about 0.2%. So we are slightly lower than where we started the day. So we gapped lower, but that was a close around 484 on the Qs. So it was down slightly. If the bulls can finish this week or this quarter on a positive note, I think that'd be an encouraging sign for at least next week to be a little bit more of a fight. Like the bulls can fight instead of like just bowing and just giving up, and the bears all of a sudden just start clawing back. But we're at some key levels here. Dow, the Dow's holding in there pretty resilient above the 38% fib as well as up above the 200 moving average. So the Dow's looking a little bit more resilient than the others, certainly better than the NASDAQ right now. And then the Russell's in, I think this is pretty tough. This EMA is the 21 period. This one is the 50 period. So we have officially had a death cross on the Russell. So this crossover right there is your 50 period crossing your 200 period. That does put the small caps potentially in a bear market, technically speaking. So even if this market's going to pull back a little bit more, I think that this would be a sell the rally on small caps right now. Now, it could still be resistance offering support. It could be a chop fest in here, but I don't see a reason, unless price can break this trend line, I don't see a reason where the small caps get any leverage to the upside. I think this would be at best, it chops around here, maybe gets on the right-hand side of this trend line, and then perhaps it's a better spot to go long. But we are down, nearly 20%. We've got the death cross on the moving averages. This looks like resistance now. This looks like resistance now. So even a corrective move on the Russell could probably be faded right back down. So that's certainly not my favorite instrument. I do have some income trades on the Russell. I closed this for profit, and then this one is still open. Or nope, I closed them both. I said that yesterday. I closed this one and this one for profit. Fine. So I don't have anything on the Russell outside of shares and covered calls. What else? VIX today. VIX is slightly up, but not huge. So we'll see. VIX one day up a little bit, not huge. SVXY, nothing there. Dollar index catching a little bit. I'm looking for like the 4-hour resistance line. Could be right in this pocket. We're chewing back into this little inefficiency candle. So if the dollar rolls over, that's probably a good thing. Oil, slowly but steadily moving off these lows around $66. I'm not long on oil. I think this is probably going to be such a slow environment that it's probably favoring some sell traders. So if you're like selling strangles in here, if you're selling iron condors, it's probably fair. I don't love that trade. I'm not in the trade like that, but I'm saying like this is like, I don't know, it's just incredibly choppy. Oil, natural gas. I'm still long natural gas. Gold again, are we up to fresh highs again today? This high was 30.57. This high is 30.59. So another fresh all-time high on gold. Silver, a nice move on silver today. Really nice move on silver. So silver is making its way. Silver futures, this trade closed out for profit yesterday. That was a nice little winner for about $1,000, and that was the trade here. So that trade is done. Closed out for a winner. And actually, let me see if that is /SI. Yep. I'm going to update that in my Discord. So this is reply. So 277.90 per contract. Very nice. SLV at 31. My calls are 35, I believe. Let me check and see where my covered calls are on SLV. I think I went out of the money. I still think SLV has room to run. So all my covered calls are at 31. Let me check on these each. So this one is just a credit spread. This one is shares. They're covered at 35. Bull put spread and a diagonal spread. I mean, not much is going wrong on any of these trades. So covered there, and then the diagonal spread at 34, still looking good as well. These are all going to be pretty similar. So shares are covered. This one would be the diagonal spread. So let me separate this one. So this is shares. This is the covered call. And then the diagonal is the January to June combo. And this is a bull put. There. So up a decent amount. So I can just go through and organize that. We have about 6 minutes for the close. Markets is hanging in slightly negative on the day for the S&P, slightly negative on the Qs, but I mean not slightly. That's half of 1%. We'll see if the market fights back for the rest of the day for the last 5 minutes. Dow at 0.17 to the negative side. IWM 0.4%. Tomorrow's another day. Tomorrow's a final, one of the final trading days before the quarter. We end the quarter on Monday. I'd like to think the market can hold with some type of resiliency and not let the market fail. We are at some key levels, though. I mean, if the market can hold up and have some resiliency, we're really just going to have to kind of wait and see, like, how bad is April 2nd? What happens with the combination of April 2nd is Trump's, big tariff plan with reciprocal tariffs revealed. We also have non-farm payroll, which is going to be look at the jobs market, what's happening with the Fed, not the Fed cuts, but the federal government cuts, and what does the unemployment situation look like, or the, job situation look like. Most of the jobs we've created have been government jobs, right? Most of the stimulus in the economy has been government related, like it's been fiscal stimulus. So if that balloon is being deflated, then this market hasn't priced in yet. I'm sorry to say it, but this market has not priced in the potential effects of like getting worse in the federal government, which then affects contracts, which affects jobs. It can snowball into sentiment. It can be all this pain that I talked about in the first 20 or 30 minutes. So WMT, Walmart. It's defensive. I mean, I think Walmart needed to hit the 200 moving average, and it's doing it. So yeah, I mean, I have shares of Walmart. We still have a decent bar count, about 300 bars. I'm sitting with a collar. I own the shares around $90. I have a collar at 100 and a buy put for protection at 65. It's not a great dividend play. I mean, it's a 1% dividend, which is nothing. But if we're going into consumer defensives, then perhaps this is fine. I mean, Walmart is one of the largest retailers in the world, as well as one of the largest cost-effective retailers in the world. I'm not sure how much they're going to be negotiating their supply side. I mean, are they going to negotiate prices lower? Are they worried about tariffs, or are they just worried about consumers, cutting back on spending? Honestly, if you have wealthier demographics of consumers that are going to start moving and migrating to Walmart for purchases, who knows? I mean, Walmart could show some resiliency, but it is still trading at a pretty high multiple, like higher than it's ever been. So that's my concern, is that I don't really love buying Walmart at $85. I'd love to buy it more when it's had a decent correction, but there's not really a lot to look at. I mean, this thing has been on a rip since this last little pullback around $54. I mean, I think a pullback is needed. It's probably coming. We've had a little bit of correction back to the 200 moving average. So I could see Walmart doing something to this effect: a high, low, lower, high, lower, low. If that's offered up, I think Walmart is a stash away stock. I think there's good growth opportunity there. It's pretty much defensive, and it's a retailer that's probably going to do pretty well. It's now, I think it's number 2 now, because Amazon surpassed it with revenues this last year. But still, big stock, and we'll see. Nike, I sold some puts on Nike post earnings. Home Depot, if we fall lower, Lowe's if we fall lower. Let me check on some home builders actually. PHM is Pulte Homes. Still want to see a deeper pullback on this one. Lennar's, LEN, I want to see a deeper pullback here. I don't know. We'll wait. COVID lows. I mean, there could be some pretty nice support on Lennar. Let me check and see if these have changed as far as fundamentals go. So if I go to PHM for Pulte Homes, I mean, looks really strong fundamentally. 6.9 price of earnings, obviously not crazy expensive or overextended. Fair value at 247. That's encouraging. If we have a monster slowdown in the housing market, their price could be affected, but they're probably able to cut prices. I mean, they build homes that are not whatever ridiculous prices the sticker on it right now. They build for about a 20% margin. And if somehow prices get cheaper, it depends on supplies, obviously. But yeah, I don't know. This could be an interesting play in the, I don't know, coming, let's say, year. Like I said, I might be wishful thinking that I want to see the market go something like this: high, low, lower, high, lower, low. Try to find some correction, try to find some past resistance, and then maybe get a pretty healthy discount. Maybe this trend line is a little bit more to go. So maybe this trend line is a spot to get long, right? Maybe. But if I don't get a trade, I don't take a trade. Lennar coming back into the trend line, but I would look at same thing here: past resistance becoming support, maybe a high, low, lower, low, and then I don't know. Do we build from here? I mean, if we go back up to the all-time highs, a $90 stock that goes up to $200, if it's still fair value there, pretty good level. So Pulte to Lennar. Again, snowflake analysis looks pretty good. Reliable dividend of 1.7. That doesn't get me excited. What's the price to earnings? 8.0. But trading around fair value, so that's not great compared to Pulte. Look at the Toll Brothers, TOL. Also pretty good on the snowflake analysis. Price to earnings below U.S. market. Okay, earnings forecast to grow. Earnings grew. Trading good value. Probably undervalued. Price to earnings 7.2, but trading at fair value. Well, shoot. All right, so I guess Pulte. And again, with a deeper pullback, I'd say Pulte to me fundamentally looks a little bit better. But yeah, there's Toll. Let's go high, low, lower, high, lower, low. Let's pull back. Maybe connect the lines in this trend line here. So that's it. All right, tail of the tape. We're officially here for the close. SPX down 0.33, NDX down 0.59, Q's down 0.57, Dow down 0.3, Russell down 0.47, VIX up a little bit on the day. Currency strength. Currency strength, pound, euro on top today. New Zealand this is JPY and CAD on the bottom. Dollar mixed, Aussie mixed, Swiss, euro, or Swiss and New Zealand mixed. So pound strong, euro strong, CAD, yen weak. So that means your pound CAD going back up, your pound yen going back up, your euro CAD going back up, and your euro yen going back up. Those are the bigger trades of the day. That all started happening around the divergence happening around 9 a.m. Eastern time, just after the U.S. Open. Okay. All right. I will let you go for the day. If you'd like to join my Telegram, you want to get some information, I do have the link if you'd like to join me for the webinar on Saturday. I've got the link right here. I had it. Hang on a second. There it is. This is here. So the Saturday, it's Saturday. That would be March 29, 12 p.m. Eastern time. There's a link if you'd like to join me. It'll be a live session, money manager hack, cost-effective course, servicing the whole thing throughout April, doing a class every Wednesday in April. And I've got positions already set that I'll share with you. I've got positions set out to August, December. We'll talk about some through the summer as well. But I think it's a pretty good time to consider, if I want to protect my portfolio to the downside, what are some cost-effective ways to do it? And the reason it's so helpful is because I can tolerate the drawdowns when I know something's at least working in my favor. It's difficult to position a portfolio unless you're just always cash all the time, never have any open positions, which for me, that's not the case. So when I have open positions, I want to make sure that I can, protect the downside if we're going to have some dips and pullbacks and corrections. And even a bear market. I want to, make as much money as I can in those trades, but do so with a calculated risk. So that's class on Saturday's webinar. And then the first class will be next Wednesday to start talking through it for the entire month. Okie dokie. I'll let you go for today. Happy Thursday. Let's be back at it tomorrow. Daily Profit members, I'll see you in the morning. And live tomorrow, I have a 9 o'clock session, 10 o'clock session, 1 o'clock session, 3 o'clock session, 4 o'clock session. So busy day tomorrow to wrap up the week. All in all, it's been pretty decent, pretty busy, but a lot of good trades. This week, a bunch of winners. I think between this week and last week, I probably closed out over 120 plus positions for profit. So it's been a very active week. I know it's interesting to see right now that I don't know. I'm just curious. Like, give me some comments in the chat before we go. How's everybody trading right now? Is everybody scared? Is everybody nervous? Are we just grinding through it? Are you willing to trade through this crap? Or do we have traders? And honestly, maybe the people that are scared are just not paying attention because they're, taking all their money out. They're closing positions. They're begging their financial advisor to not take any more trades and risk. I have no idea. But, I hit all-time highs in my portfolio again for the year this week. And that's not a bad thing considering we're still way off the all-time highs. So regardless of what happens, I'm going to continue to trade through this. Here's a look at my Telegram. I shared this earlier. 20 for 23 in live trades of newsbreakers, 63 for 67 in waterfall income, with more to come hopefully for another like 5 or 6 trades to close out. 35 for 36 in daily profit just in the last few weeks. We had another 2 for 2 today. So I'm just going to continue to grind and trade through all this stuff. That is what traders do. None of what this market does up, down, or sideways is in my control. But I can focus on my risk, the trades that I take, and I'm not trading big. I'm not trading large. I'm very risk averse right now. But if I trade through it, I will probably come out a lot better than if I just give up and if I just stop trading and hope that things just get better. It's like, that's not a strategy, and if you're not paying attention, then you actually miss where the big opportunities are. So there we go. So we got mixed, taking small trades. I'm not holding overnight positions right now, but trading intraday. Okay. Heavy on metals these days, but still positive for the month. Okay, good. Long-term guys, so buying very slowly. That's fair. Yeah, if you're buying slowly, like, just be prepared to have some really good levels. I think that we're going to have some scary but fantastic discounts in 2025 for a myriad of reasons. But if what I am potentially preparing for, it doesn't mean that I'm like angling my entire portfolio to the downside. But if my protection side is going to work out, then I've got protection that helps me stay out of trouble and protect my portfolio. And then I have opportunities that I have been waiting for, which actually reminds me a lot of what I did in 2020, which was have the courage to buy stuff, have the cash at the ready to buy stuff. That discount could set you up for years of success. So It's not easy. I know Buffett says like you can't time the market, but I disagree when it comes to these big opportunities when you start to see 10, 15, 20+% corrections. Yeah, I get it. You may not time those and know exactly when they're going to happen, but my gosh, if you're paying attention, just the courage and cash to put some money at work when the market is dropping aggressively, when people are fleeing, you can get some levels that might not be seen ever again. And that to me is pretty attractive. So again, plan for the best, prepare for the worst. But I would encourage all traders out there to be willing to navigate these markets and trade through these markets. The best thing you can do is control your risk, right? Take good trades, stick to the process, don't do anything silly, and that's probably the way you survive it. Is just don't do anything stupid, right? I mean, and what is stupid? Probably trading too big, trading too much risk, over leveraging, being too exposed, and not having like an active hand in like massaging your positions. So if we can improve those things and you control your risk, you'll be fine. So I just want to see traders like trade through it. I think that's the only way to do it. It's not going to be easy. It never is. But man, this market can offer up some fantastic paying attention. And if you keep the risk small, you can decide like, look, I think it's a little bit better time to, get in, get a little bit more active, maybe even put in some skew where I want to be, focused on, the market's probably going to go up now and focus on that for the next like 3 to 6 months. But that is to be determined. I don't know what this market wants to do. So I'm obviously watching very closely, right? It's also hard for me to trade at all-time highs. I get it. I mean, the nice thing is we're not all-time highs. So, I mean, we are not at all-time highs. If we get to all-time highs right now, it's a pleasant surprise. I think there's potentially more slides to the downside coming. Um, but it's what it is. I mean, if the market goes all-time highs, that looks like 2025 gets a lot easier. If the market has more pain ahead, then I'm going to be ready for it. I'm going to be braced for it. I'll try to make some money to the downside, protect the portfolio. But there will be really good opportunities if we're 10, 15, 20, 25% from all-time highs. Now you're talking about, a discount that you've been waiting for and you finally have it. Now the question is, can you act on it? Right? Royal Trade says can't blow up an account 1% risk. That's generally true. I mean, you can survive. You can take some heat, you can take some losses, but 1% risks. I mean, you can stay in this game for a long time. Yep. Okay. Cool beans. All right. I will let you go. I'll be back at it tomorrow. Thanks, everybody. Take care. Bye.